Hi everyone, this is Gopi from Canada Tried and Tested. I have some update for Canadians. We'll go over the new temporary tax changes, fresh saving opportunities, and strategies which can help you keep more money in your pocket. From recent announcement of GST holidays to update on RRSP, TFSA, CPP, and capital gain tax, in this video, I have got you covered. Let's dive in and explore what it means to you for remaining month of December and the year 2025. First, let's talk about proposed GST updates. The federal government newly introduced this GST holiday, and many Canadians are looking at this as a welcome relief to ease their holiday expense. From 14 December 2024 to 15th of February 2025, Canadians won't have to pay 5% GST on select items, including Christmas tree, children clothing, toys, select beer, wine, and restaurant. For details, check the link in the description. One thing you have to note is that province like Ontario, which also has HST, only the federal portion of 5% will be waived. So this incentive aims to reduce household cost during festivity and making celebration more affordable to the families. To understand the impact, let me show you what it means to you as a saving. If you're spending $1,000, you would save $50 in total. If it is $2,000, you would save $100 in GST alone for this 2 months period. So, smart tactics to make public feel good. What do you think? If you ask me what I feel, while this may come as a thoughtful gesture to many Canadians having little more money, it's important to understand the broader implication. Temporary tax breaks like this often comes with a trade-off. For instance, while this may encourage consumer spending in short term, this could almost certainly contribute to inflation or delay in other expected financial benefits, such as mortgage rate adjustment, which I would be more interested. I personally feel that such financial incentives, though helpful in a moment, rarely solves underlying economic challenges, and also how businesses are going to implement these are yet to be seen, because they have to adjust this system accordingly. Now, coming to Registered Retirement Saving Plan, RRSP Contribution Limit for 2025. As the name suggests, this is a retirement vehicle which Canadians can use to invest, save, and grow. In 2025, the amount you can contribute has gone up to 32,490, which is $930 more than last year. This means you have more room to save money and reduce the taxes you pay. When you put money into your RSP, it lowers taxable income, which can help you pay less tax now, plus the money in your RSP grows tax-free until you take it out in retirement. This makes it an excellent tool to grow your savings faster. If you are in a higher income bracket, contributing to full amount can especially be helpful. It's a smart way to save for future while getting tax benefit today. Whether you're planning for early retirement or just want to save it for later years, this increase gives you more opportunity to reach that goal. Coming to Tax-Free Saving Account, TFSA, Contribution Limit for 2025. As the name suggests, this is a tax-free saving and investment account. You don't get any tax incentive now as you put money into this, which you are saving. And of course, you have already paid taxes. But the money what you put here grows tax-free. The contribution limit for 2025 is 7,000, which is same as 2024. Every year, you get informed about the cap. For example, 2023, it was 6,500, 2022, 6,000. And if you have been able to contribute to TFSA since start of 2009, you would have got lifetime contribution till date 102,000. I made a detailed video on TFSA, how, where, how to open, things to keep in mind. Everything has been explained in detail. Any money that you earn in TFSA, whether interest, dividend, investment in Canadian stock, ETF, US stock, ETF, everything goes tax-free except US dividend paying stock, where dividend attracts 15% withholding tax. So when I buy US stock, I make sure I don't buy US dividend paying stock in TFSA. I came to Canada in 2019, so my TFSA rule looks like this. And I make sure I don't leave any unused room and use it smartly for long term and let it compound. It's a fantastic money growth tool where you can pay low taxes. Coming to First Home Saving Account, FHSA, which was introduced in 2024 to help Canadians save for their first home. It combines the benefit of RRSP and TFSA, allows you to make tax deductible contribution while letting your investment grow, and withdrawals stay tax free if you used for buying a home. For 2025, the annual contribution limit is 8,000 with a lifetime cap of 40,000. This means you can save and grow your money without worrying about taxes, making it easier to reach your goal of home ownership. If you're first time home buyer and haven't owned a home in last 5 years, this is a powerful tool to add to your saving plan. It's designed to make home ownership more affordable and within reach. Now, update on Canada Pension Plan CPP. So, this helps Canadian by providing income in retirement. Here is how for 2025 it looks like. Regular CPP contribution rate stays at 5.95% for both employees and employer. Coming to maximum pensionable earning, that is highest income amount that CPP contribution applies to, is now at $71,300. The maximum an employee can contribute is shown on the screen, which is higher than what was there previous year. Now remember that if you are self-employed, you pay both employee and employer portion. So your total contribution will be up to what you see on the screen. Also, CPP 2.0 contribution. This is an extra layer of contribution for income between 71,500 to 81,200. Here the contribution rate ranges 4% with maximum contribution for employees $396. If you are self-employed, remember you will be paying both and the total comes to 792, which you can see on the screen. So self-employed people, remember for 2025, including regular CPP and CPP 2.0, you will pay 8860. Coming to federal tax bracket adjustment. While these tax rates themselves haven't changed, income threshold have increased to account for inflation. For example, the lower tax bracket 15% now applies to income up to 57, which is an increase from 55.8 in 2024. Such adjustment help ease the effect of inflation, allowing you to retain more income before moving into higher tax bracket. So, the basic personal amount BPL provides tax relief, especially for lower income earner, by allowing more income to remain untaxed. In 2024, BPA was 5,750 and it has been increased to 16,128 for 2025. Now coming to the proposed capital gain tax changes, these changes are not yet enacted into law and are currently under consideration. They may be undergoing revision before being finalized. Here is what is proposed. Lifetime capital gain exemption, LCG, where exemption may increase from 1.2 million to 1.25 million for small businesses shares, and the inclusion rate for capital gain above 250K is likely to rise from 50% to 66.7%. Canadian Entrepreneurs Initiative, that is CEI, this is proposed benefit for specific sector like agriculture and manufacturing, which includes reduced inclusion rate of 33.3% on 200K of gain annually with a potential raise to 2 million by 2034. Now update on Home Buyers Plan, HBP. Changes introduced in 2024 have been made to HBP, and first-time home buyers maximum withdrawal limit has been increased from 35,000 to 60,000 per individual, and repayment grace period extended to 5 years for withdrawal made between 2022 to 2025. These are some of the key highlights for 2025 tax rule, which can help you plan better. It's always always a good idea to consult a tax professional to fully understand how these changes may affect you and make most of the opportunities what is available to you. Thanks for watching. If this video is helpful, clarify things, give it a thumbs up, subscribe for more insight. See you in the next video. Cheers.